Hey, Chick, thanks for coming today. I really appreciate your time and all of your insights in the last 3 years that I've received from you. Honestly, I don't know that if you know, but I'm following you since your time with Glassnode in 2021. The first time that I've actually picked up on you on the web was 2021, the summer when we had that Elon Musk. Deleveraging and
Oh yes,
yes, in
I'll
May.
never forget that. That was a sell. That was my probably my second. I'm not going to say favorite. Favorite's the wrong word, but the second sell off that I like. It is just baked into my mind. I'll never forget it.
I know, and back then I was following because my journey started in 2019, just generally, and this was the first time that in my life that I've put a significant amount of money in Bitcoin. That's why I say it started back then. I was aware of
Yes.
Bitcoin since 2013, but the first time in my life that I've put a lot, like more than 1 year of my income in Bitcoin, was 2019, and started following all of the stream, like all of the information stream that I could pick up on. And 2021, I stumbled upon you on Glassnode and their channel. But since then, I've been following you very closely, and you are on the Bitcoin scene for me and two other three people, as you know, with Lynn and I guess some portions of Root as well. You're the people you're consistently objectively correct, and I'm very glad that I'm going to be talking to you today. And I just wanted to start off from here. How did you get into on-chain? Just overall, how did you get and arrive to the conclusion that you're going to spend your life like 3, 4, 5 years on-chain metrics on Bitcoin, which are actually 5 or 6 years old?
Yeah, no, very, very good question, and it's a very strange story. I mean, it's one of those things you don't set out after high school and be like, you know what, I'm going to be a Bitcoin on-chain analyst. Like, it's just not how it plays out. So my background is civil engineering, and specifically, I used to deal with a field called geotechnical. So that's everything in the ground. So I've worked on like landslides, I've worked on mines, I've worked on basements, tunnels, all sorts of things that use the ground. Now, what's interesting about the ground is you just get what Mother Nature gives you. You don't get steel, you don't get concrete, you get like sometimes it's clay, sometimes it's rock. But the interesting thing about it is there's lots of risk because you have to make complex engineering decisions off very little information and a lot of incomplete information. For a whole basement, you might have two boreholes that are as big as this microphone. So you just don't have a lot of information. You've got to really think outside the box. So that's where I'm coming from. Lots of big data, but also a lot of yeah,
Yeah,
that's about right.
yeah.
That's like how we operate. So that's where my engineering side came from. Now, I bought the absolute top in 2017. You couldn't have bought higher than me if you tried. And I just got, my portfolio got destroyed in 2018, but I didn't lose interest. Something about, and it wasn't actually Bitcoin, it was just markets. It was the first time I'd ever bought something and invested in something. So I bought Bitcoin. I sold it for Ethereum. I sold the Ethereum for shitcoin one. I sold shitcoin one for shitcoin 20. And suddenly I've got this spreadsheet full of like complete junk. And anyway, by the end of 2018, all my money's gone. It's worth zero. It's all gone to nothing. I'm like, okay, I've done something wrong. So I went back and I read the white paper. I'm like, why don't I start from zero and like forget everything that I've just learned? I think this market thing is interesting. There's something about these coins that makes sense. Let me go back to basics. Read the Bitcoin white paper and I was like, there it is. Now it makes sense. Now that was the first step. I also was doing a lot. I was living in London at the time, and I was doing a lot of reading. Bitcoin. I think the Bitcoin Standard honestly was my true orange pill. I also really enjoyed Pete McCormack, his podcast. He did a session on the, I think it was like 5-part series on Mount Gox,
Yes.
and the thing from that I took away, I was like, why were these guys fighting? And they did all sorts of stuff like legal challenges, and they were fighting tooth and nail to get those coins. And I'm like, this is in 2013. What did they see that I'm not seeing? So then I finally went down the Bitcoin rabbit hole and the penny just dropped. Now, on the on chain side, I believe it was December 2018, I think, that Coinmetrics released the realized cap. And this was a really interesting time because I'd only just come onto Twitter. I then very quickly found the Murad and Dave Puel and a whole lot of these guys, Chris Beniski, they're all kind of iterating and chopping and changing and building all these new tools and metrics. And I thought, this is really cool. This is really interesting. Like, I can kind of take my data analysis and like I'm running around in spreadsheets for a living. So I'd start plugging all these numbers in and just like trying to model how I can understand this Bitcoin thing better. And it was just so interesting. And I would download PDFs at work, I'd print them off, I'd read them when I was traveling, I'd read them on the bus home, and I just had this like folder of all these PDFs of just like random metrics just being developed. And something about it was really, really intriguing. And I just kept going down the rabbit hole, and I had no idea where this was heading at this point in time, but I was writing for another, like a smaller newsletter, just, learning about Bitcoin, learning about crypto, just writing about all this stuff. And I just took a real interest in it. And then come 2021, one of my subscribers actually said, "Hey, look, Glassnode, who was one of the leading on-chain firms at the time, they're hiring a data scientist." And at this point in time, I was probably about 3 or 4, maybe 5 months into the website you see at Check on Chain
Yeah.
now, the charting suite. That was my original project to say I need to get off Excel, because I used to download Coinmetrics CSV, plug it into my spreadsheet, and I just couldn't do this anymore. It was terrible. So I decided I'm gonna codify this thing so it just pulls the data every day. So that's how I taught myself Python. Started building up this charting suite. Joined Glassnode professionally, and the rest is a little bit of history. I just,
Yeah.
at that point in time, I had to start analyzing in a live fire exercise to try and understand what these metrics did. And it very, very quickly dawned on me that we don't know what any of this stuff does. And my pitch to Glassnode when I joined them was actually, by the way, guys, I'm not a data scientist, but what I do know is what these metrics actually do. And my boss at the time, the guy who hired me, basically says, "Well, that's good because we've got a bunch of data scientists and none of us really know what any of this stuff does in a market environment." So it was a really, really good match. We did, 3.5 years there. And then it just came time where I was like, you know what, I want the next challenge. And that's where Check on Chain, the company and the project, came from. Is, I wanted to just go out and do not only let's see how far I can push this myself, but also I wanted the challenge of building a business, just going through
Yeah.
that whole customer experience. So that's the journey. It's kind of a strange pathway, but it's just the way that my cards happen to fall.
Yeah, I remember you were on fire when we were trying to bottom in 2022 with Glassnode, and you had some webinars. I remember asking you questions, and the first thing that I've noticed that you answered very statistically correct, but also gave you like your insight. You said that we might have bought like 80% chance that we might have bought, or 90% chance. I still remember your reply. I was playing anonymous on the chat there on Zoom. And you replied very, very correctly. And I remember also one thing is still, I don't understand one thing, and you can give me just your insight. Why many hardcore Bitcoiners don't take on-chain data very seriously, even up to
Funny,
this
isn't
point?
it?
It is
I
very
know.
funny. I don't know why, but you've noticed it, I guess, on conferences with people that are all-time Bitcoiners.
Oh yeah, for sure. No, it's a very common thing. And honestly, if I'm really going to pin it for why I think that is, the truth of the matter is, and I'm the first to admit, in 2021, I just didn't know what I was doing with anything. I knew what the metrics did, but like actually applying them. So like knowing the theory in the textbook is one thing. Actually applying them in a live fire exercise is a whole different thing.
Yes, yes,
And I think there was a lot of analysts who, for want of a better term, we didn't kind of consciously recognize how little we knew. And there was a lot of like confident calls, and Twitter creates this engagement where you have to be confident and you have to shill stuff, and people like, look, exchange balances are going down, long-term supply is going up. All these things are like good, bad, and people like the positive engagement. And I just think a lot of people got it wrong.
yes,
And I think what happens is a lot of these guys just look at it and go, it's just voodoo, it's just TA, it's tea leaves. I saw all these guys get it wrong, and they make the very, and understandable, but the big mistake of saying these analysts got it wrong, therefore the discipline sucks.
yes,
Whereas, it's if I go to an under nines football match and I watch them kick the wrong goal and get own goals every second time, that doesn't mean that FIFA is a scam. You know what I mean? Like, you got to get those two things right. You got to separate the players from the game. You can have players who just aren't that great. And by the way, that's not to say that they're not great analysts. It's just to say that none of us did. None of us knew what this stuff did. And we're now, 4 years later, we know a whole lot more about this stuff now. So all of those analysts who've stuck around and been analyzing this stuff, we're all better. We've
Yes.
all learnt our lessons along the way, and there's a hell of a lot more we still have to learn, but that's part of the journey.
Just two things. Can you hear me better because I switched to the microphone? I guess it was coming from the camera. Now it should be better.
No,
okay.
sounds good.
Just I think in 2021, what happened was the whole core of the science of on-chain was so young that you couldn't really pick which parts of it worked and which didn't. I remember that many people back then watched the size of the wallets and movements that they made rather than the time that the coins didn't move, which was which I think is the key part, like the longevity of the movements rather than the sizes, like in overall, like looking at the whole on-chain, all of the coins instead of looking at only segments of the coins is extremely valuable. I see it in your when you analyze it, that you look at the long-term holders, short-term holders, rather than looking at only 10,000 wallets or higher, like etc.
And you'll actually see that I very, very rarely do like, oh, here's small holders, here's big. I really just don't use that data because it's very noisy. I don't think it actually can, and there's a lot of data cleaning that needs to happen to make it useful. Because particularly if you're looking at, and here's the best way to think about it, smaller wallets, we call them shrimp and crabs, and like less than 1 Bitcoin, less than 10 Bitcoin. You can actually reasonably put all them together and just say, like, let's look at them as a big bucket. Why? Because in the ocean, how does shrimp actually move? As a big blob. They all just kind of do the same thing, and it's like this. We all DCA the same way.
Yes.
Yeah, sure. There's going to be like 5 or 6. Some people DCA monthly. Some do it, whatever. We all kind of look the same.
Yes.
Once you move on the other end of the spectrum with whales, it's just a very different animal, because is it a whale? Is it an exchange? And the challenge there is, if you get that wrong, what if you think it's a whale but it's actually an exchange? Well, then every sell is actually a buy, or every buy is actually a sell. You get it perfectly wrong, and because you actually don't know which one it is, you actually can't make any decisions based off it. So I just throw it out, don't use it, because there's so much other stuff we can use that's just better and more useful.
I used to work in crypto.com for 2.5 years actually, almost 3. And I'm quite familiar with the insights of how an exchange works. They haven't changed that much since the last year, and I can tell you that what you say about the exchange really resonates in me, and only people that have worked in it and looked at blockchain, like how you secure your addresses and move everything and create addresses constantly new addresses constantly in order to secure your wallet. Is something that does happen, and that is the reality. And in order to pick that up on-chain, it is very hard. Obviously, we don't know that quite in time that who is who. We will eventually do, but who is who immediately, we don't know that. Let me just ask you. You said about 2013 how people were fighting about these coins, and this was something that really like you picked that up on. How would you summarize the whole situation with the 80k Bitcoin? I've watched your whole for the subscribers, the video for the subscribers, and your research. But if you have to summarize, is this good for Bitcoin or it is bad for Bitcoin that we have this situation unfolding in front of us?
Yeah, so to give a bit of context,
Yes.
I think it was on the 4th of July, there was 80,000 Bitcoin from the 2011. 2011, like real old stuff. I think 2011 or 2014, doesn't matter. Old school. So you've got these coins. Very rarely do we see coins of that vintage move. I think they were 14 years old, so whatever that puts the date as. So anyway, you've got these very old coins that moved, and they moved. So there's basically, I think it was 10,000 Bitcoin UTXOs. And the reason why we don't see many of those move is nobody. Like, there's so few people who hodled from that long. Most of those coins are lost. Like no one hodls to. I think that I did the calcs. It's like if they invested $6,800, and it's worth like $9.5 billion now. Like, what? So anyway, it's a very strange saga. So they transacted the other day. As you can imagine, that many coins that have been dormant for that long, massive realized profit. Massive coin day destruction, like on-chain metrics just shoot through the roof because you're like, whoa, what was that? You very rarely see these kind of things. So first of all, it's a reminder that those coins are actually still out there and people still hold them.
Yes.
So I try to think about it because we can never know. What do they want to do with it? We've seen some of them go into Galaxy Digital as an OTC desk recently. I think this week, and are they selling? They might be. They could also be borrowing because Galaxy also has lending desks. They might also be paying for a service to say, I don't want to be on these whale trackers anymore. I got $9 billion. Can you slowly drip feed them out to me in smaller batches? I don't know. You can make up 1,001 different reasons why they'd be doing this. But for me as an analyst, it's a good reminder that those coins, we presume they're lost, but they may not be lost. And this is a good example of how that works. And I use my coin time economics framework, which is a very deep, dark, on-chain nerd math stuff. But that was just helping me understand those coins are now back alive. They've come back into the system, and that's what I showed in that piece. So the other thing that's quite interesting is we've got to think about that in terms of the quantum debate, because at some time in the future, maybe decades away, but we're going to have to deal with this quantum situation. At some point, those very old coins will start moving, whether the owner moves them or does quantum move them, right? At some point, someone's going to move those coins. It's going to happen. So from that perspective, it's a good lens for us to think, well, there's been some people saying we should freeze people's coins. And then I'm like, maybe not, because you don't know when quantum's going to arrive, and what if he just happens to go back and spend his own coins? So
Yeah.
there's a whole lot of these things that we just have to mentally think about. So it was a very interesting debate and a very interesting event, but just gives you a bit of a snapshot into how the world really works in the Bitcoin lens.
Mm. Uh, could we go into more depth about the current situation that we are in? Could you explain who is the check the hodler is and who the check the analyst is in 2-3 sentences?
Yes.
Who those people are?
Yeah. So when I write my reports, I have a broad audience. I've got people like myself who are young and still DCA stacking. I've got people who've been around for 1, 2, 3 cycles. I've got retirees. I've got professional money managers. So as I write my ideas, what I really try to do is make sure that no matter who you are, you can read it and go, okay, I understand how that relates to me. So I use these two personas when I write. There's check the analyst, and check the analyst is very objective. He just calls the numbers as he sees it. If the market feels overheated and all these statistical levels are blowing out, he's not going to say Bitcoin's the best thing ever. He's going to say, look, guys, it looks overheated because A, B, and C. Check the hodler is then a more Bitcoin perma bull, right? He's us. He's the guy who my whole net worth is Bitcoin, right? My business is Bitcoin. Everything is Bitcoin. It's like so integral to my life at this point in time. That's check the hodler. So check the analyst can have all these opinions. And there's generally speaking, the analyst informs the hodler. He is telling the hodler, here's some information. The hodler has to do, all right, what do I do with that information? So a great example of this, let's talk about tops and dips / bears. When we get to a cycle top, check the hodler may not be a seller. So for him, check the analyst might be saying, look, dude, it's overheated as anything. We've blown out all these levels. It looks kind of toppy here. Mm-hmm. And check the hodler that's not a sign for him to go, all right, quick, sell everything. For him, his decision is going to be, I'm just not going to buy as much. I'm not going to lump sum. I don't want to buy the top in size ever again. I'm just going to wait. The other one is in a dip. So we saw a couple of these dips in 2024 and this year as well. These are those points in time when the market is just waterfall straight down and it's scary, right? You're looking at these big red candles. You're like, oh man, is it over? And check the analyst is going to go, look, it could be a bear. It's got the characteristics of a bear. It also looks like a dip in a bull. So we don't know which one it's going to be. Here's the conditions. This is what it looks like. And check the hodler goes, well, I'm in my 30s. I'm buying for check the hodler in 40 years time. I don't care. To me, if you're saying that it looks like a bear, looks like a dip, and it looks pretty much like we're at at least a local point of exhaustion, I'm willing to step in and buy that level. So I try to give the analytical framework and then say, what am I as a human, as a literal person who's writing that newsletter, what am I doing with that information? Because more often than not, there's a lot of people out there, a lot of my subs, they're like me. They're doing the exact same journey as I am. Bitcoin's their net worth. They believe in this thing. They don't really care if it goes down that much further, but they also don't want to buy the top. So I try to make it actionable and practical by just sharing what literally I am doing.
Yeah. Um, Having said that, how do you measure tops? Could you, because we are obviously in a bull cycle, obviously, but and then I wanna just go into that direction just to elaborate more how you measure tops in your head overall, and then just generally, do you, the second part of the question is because it is involved with that. Are cycles still alive in general, in your view?
Good question.
And why I'm asking this, I have an opinion. I just wanna obviously hear your side if you can elaborate more.
Sure. So on the topping dynamics, the way I try to look at it is what actually creates a top. Like, how do we actually form tops? And it's basically when sell side is just too heavy. So let's just think about, like, why do people sell? Because people, and first of all, this is actually something that I get a lot of feedback from. People just say, you actually helped me understand that people sell. I hear all the rhetoric on Twitter and everyone just like says, oh, there's no selling. It's like, well, actually there is a lot of selling and we can see it. So let's go with the premise that people sell. They sell the most, particularly smart money hodlers. They sell the most in the bull, and they tend to sell the most near the top. Why? Because that's when there's enough demand to soak up their supply. So people sell when the market goes higher, and we can measure it. So what we do is, well, what I do is I look back and say, well, where are the areas in history where we've seen these events? Obviously, we can see tops in hindsight. We know when people sold. So let's look at the metrics that describe that sell side. Now we've got some benchmarks to say, well, how much sell side pressure actually overwhelmed demand in the past? Now, the next level is to go, well, right now we probably aren't at the top. We might be, but I don't think so. Where do we get towards the top? And for that question, you say, well, why do people sell? And the answer is because they're in profit. So where we are right now, people are in profit because we're at all-time high, but what if they're not in profit enough? What if the delta between their cost basis and the current price isn't big enough for them to start unloading? Now, because we can actually see everyone's cost basis using on-chain data, we can basically say, well, let's just say for argument's sake, the average cost basis is like, 50K. Well, last time people sold when they were up 3x. So therefore, we've got to get to 150K, which is going to be 3x their cost basis before they start selling. So we take their cost basis, we look at previous cycles, where was that threshold, and then we extrapolate and say, well, if we were to reach this level, we'd be 1 standard, 2 standard, 3 standard deviations over the mean. We can probably say it's likely that we will see sell side there. And if you go back and look at that first set of metrics, we actually do. Every time we get to those statistical levels, the sell side rips higher. So that's how I think about it. We can't predict the future, but we can look at where hodlers sold in the past. What was their incentive set? How high did we have to go for them to go, you know what, I'm in enough profit? And I think a lot of people, markets are a game, and this is the incomplete information. This is where the ground engineer comes into it. I may not be a seller, but I know that there's some guy out there who will be. So that's the most important thing. You kind of separate yourself from you and you go, with my incomplete information, I may not be a seller. I may not understand why someone would sell. But on average, in aggregate, there are a lot of people out there who will. And we've seen them do that in the past.
Just one follow-up thing. Do you give more weight to the dollar side of the equation because their prices goes higher? Obviously, for less coins, we move a lot more value in dollars. Do you have that? Do you give that more weight, or you give weight to the number of coins that move when there is selling pressure?
Yes, it's very much a right tool, right job. I use both. So you'll see in a lot of my metrics, I'll use the BTC or the relative, like percent terms. So I'll use relative. That's when I'm looking across cycles. But if I'm comparing this cycle and I'm only looking at this last 3-4 years, I will probably use dollars because most people think in fiat currency. That's where we still, like the vast majority of people think in fiat currency. If you're measuring everything in Bitcoin, there is no profit because 1 Bitcoin equals 1 Bitcoin. So there's certain metrics, certain tools that it warrants using the correct format and tool in each one.
The question why I'm asking you this is because in the last higher sell event in January, we didn't move that like exponentially more coins than the previous one with the ETF, but we moved exponentially more dollars because of the higher price. And this came to me as a question for the first time, and I was still thinking about it. Do I look at the dollars more, or do I look at the coins moved? I used to look at coins being moved, but I came to the conclusion it should be both. That's
Yes.
as you said.
Correct. And a good example of this, when I'm looking for periods where like you go into a correction and you
Yeah.
want to see how many people bought the top. There's a few different tools we can measure, like how bad is the correction? Is it bear market worthy? So you can look at how many coins are in profit or loss, like a percent number of coins, but that doesn't really tell you enough information, because just because a coin is under its cost basis, by how much, right? The how much is actually what matters, because as a Bitcoiner, we buy coins all the time and they immediately go into the red, but you don't care because, 5%, who cares? But then you can look at things like unrealized loss, and that's the delta between the cost basis and where we currently are. And now you can start to see the dollars or the percent losses. And 5%, who cares? 10%, who cares? 30%, now you've probably done some damage in aggregate. So no one wants to be down 30% on a big position. No one really cares about being down 5%. So these are the kind of things where that kind of framework and thinking about things in relative versus absolute terms really makes a big difference.
And uh, are cycles still alive in your view? Just in general,
Yeah, this is
yeah,
a very good one. I've written a couple of pieces on this, and the answer is I don't know. But the way I'm looking at it, I wrote a couple of pieces. One was called like Same, but Different,
yeah,
playing off that meme. And it was really describing that there's a lot of stuff this cycle that is very, very similar to previous cycles, particularly 16 and 17. But then it's different as well because 16 and 17, we were 100 times smaller, irrelevant in scale. If you take the ETFs and you take strategy and you put their balance sheet together and dollar value right now, it's the 2017 top. So, like, literally the whole market cap is inside the ETFs and strategies treasury right now. It just doesn't make sense to look at those previous cycles. So, there's a lot of things that are similar. There's also a lot of things that are different. For me as an analyst, this is quite interesting and quite fun because I have to be flexible, right? I cannot have a mental model that expects the 4-year cycle, but I also can't throw away those tools in case they continue to play out and just there's human behavior behind it. So I'm very much living on the edge, allowing my models to shift and change, and just being very flexible with my thinking, because I don't want to anchor myself on any one particular scenario, because the truth is, if there's ever a time for it to break, it's now. And there's also a lot of reasons why it shouldn't break, and we should just continue on. So
mm.
very much DBC.
Yeah. Just in general, just as a side viewer, if I have to be honest, just give you one perspective. Humans are going to be humans, and we're going to be overly
Yes.
optimistic and overly pessimistic. I don't see how cycles are going to break, but they're going to be different each time. But just generally, humans are going to be humans. And now we're obviously in the more of a positive side of things. Obviously, all-time highs. But there'll come a time that people will be overly pessimistic and they will not be looking at the fundamentals of this thing. That it
Totally
comes
agree.
every 10 minutes. It works every 10 minutes. It doesn't stop. Doesn't care who the president is. Doesn't care who, I don't know, Sydney's premier is. Australia's prime minister is. It just works, or whatever in Russia.
No,
Uh,
I totally agree. And that's why a lot of the tools I use, and that's why on-chain is actually so cool. The data is all about human psychology. Show me when people make decisions. And you're absolutely right. We will, and this is the thing. People are starting to lever up now.
yes.
Leverage is entering the system now at 110K, not at 20, not at 30, not at 40, not at 50, at 110. That's where people are like, all right, now's the time to go levered long. It's like, guys, it's just so predictable. People get the most bullish at the top.
I know, and this is something that I'm concerned about, and obviously it's something that you've been asking yourself as well. Now we're at all-time highs, but the volume is low, and we have empty mempools. The mempool is empty. Active addresses are not an all-time high, or they cannot really make a really all-time high for this cycle, like convincingly. Aren't you concerned about this? And just in general, are you thinking that this could be a top, like a really big top because of this, or the leverage is just gonna come in and now we have different tools rather than different than previous cycles? How are you thinking about the whole dead on chain, just in general situation? When I say dead on chain, obviously just not a lot of transactions is happening.
Yeah, this is a fascinating topic and one that I don't have a firm answer for just yet. So to give
Yes.
people a bit of context, as you said, the mempool is basically empty. There's very, very few transactions. But here's the thing that's really going to do your head in: transaction volume, as in on-chain volume, is actually trending higher. It's like 18 billion a day. Usually on-chain volume, so this is the amount of coins moving around Bitcoin. Usually it's very, very similar to spot trade volume. So spot trade volume is usually like, $5 to $8 billion a day, something in that ballpark. On-chain volume is usually the same. Right now, spot trade volumes, this is on Binance and Coinbase and all that, the actual trade, that's down at 5 billion. It's very, very low.
Yes.
And yet on-chain volume is at 18 billion and trending higher. So we've got on-chain volume up, spot volume down, futures volume down, which is very strange. Options volume all-time high through the roof. All of this stuff is very, very odd. Now, on the active address and transaction counts, we actually can't, I don't use them anymore. And the main reason is actually because of ordinals and inscriptions and all that nonsense. Basically, those have changed the dynamics of transaction counts. And so transaction counts can be at all-time high and active addresses can be very low, because a lot of the transaction activity with that kind of with ordinals and the like, if you're looking at active addresses, we don't double count. So if you use one address multiple times, because a lot of these ordinal traders, they use it like MetaMask, where they have one address. They don't change between different addresses.
True. Yes.
So if they're using many transactions in a day, but it's all the same address, it's one active address, but 50 transactions. And a lot of this stuff is bot trading and all that. So there's just all these weird dynamics. So anyway, on the soft volume, it is something that remains to be seen. The high on-chain volume makes me think maybe there's a lot of OTC trades. Then you see this 80,000 Bitcoins start moving billions. I think there's probably a lot of that going on. The ETFs are still very, very strong demand. I mean, we put in $1 billion the other day, really, really massive inflows into these ETFs. Treasury companies, they're going to be a lot of OTC and they're buying very large chunks of coin. So there's just a lot of bits and pieces moving around at the moment that it tells me that we're not dead. It's just got a very unique profile for this particular moment in time. So it's an interesting one. It's an unsolved puzzle for me just yet.
Yeah, and do you think that ETFs have a role to play in this like weaker overall on-chain
I think
activity?
So. I think so, yeah. And another thing that's really important to note is that April was a bit of a pivot point. We put in a bottom on that April sell-off,
Yes,
75K or whatever it was. And that particular bottom, since then, up until April, everything was very spot driven, very normal, very structured, like really textbook market cycle. Since April, it is very, very clear that we have moved to a more leverage driven environment. Futures open interest. So here's the other thing: futures open interest, all-time high, but volume down.
yes.
A lot of strange stuff going on. So we have moved a lot more into a levered play. You can even see this in these Bitcoin treasury companies. They're an aggressive spot bid and they're like rushing in to buy as many coins as they can. That is stuff you don't see in bear markets. That is the kind of stuff you see in bull markets, late stage bulls. So there's no question in my mind that we are later stage in this bull. I think it gets pretty exciting moving forward. I don't have a firm view on like how this volume all plays out, because we've got these strange divergences and like it's going to take a bit of time to really unpick and find out what's going on.
Yeah, who knows? But just when I said ETFs, you've noticed it as well. I bet the BlackRock's ETF is diverging significantly from the rest of the
Massively.
ETFs. And when I say not only by number of coins, but in terms of the cost basis, they are moving significantly higher than the rest of them. So for the viewers, obviously the cost basis is the dollar amount of the average coin buy that they have on their wallet, the AUM, so the assets under management. So the rest of them are like around 60K, and I think it's up above 70 right now. So there is a significant divergence. Obviously, they are the highest buyers and highest not so highest sellers in the deleveraging events. I've noticed that as well. But how would you interpret this? Are they just the strongest hands on the market, or how?
No, I actually think this is far more technical in nature. So IBIT if you go to the start of this year, or maybe it was like October last year, October, November, they were about 45% dominance. They're now 55% dominant. So they've grown more than half the total ETF complex. And I believe there's one very, very obvious answer for this: options. There is very, very little demand for the second biggest options market. And IBIT is just where everyone is piling in for options trading. So
Okay.
because IBIT has the biggest, most liquid and deepest options in the ETF complex, people now have to buy the collateral, which is IBIT, to then go and trade the option. So
Uh,
I'm pretty confident that's why that's playing out. And you're right, pretty much the AUM in BTC terms for all the other ETFs is kind of flat for the last 6, maybe even 8 months. And IBIT is just ripping to the upside. So IBIT is definitely peeling away, and it has to be options.
and also the passive bit, could the strongest passive bit of pension funds or whoever, they're just buying IBIT instead of anybody else, just because of the.
It's a bit of a shelling point, right? And even myself, so I use the ETFs in my retirement account. I ended up going with Fidelity because I didn't want my coins in Coinbase. It's kind of a vote with my feet, and I will vote my wallet. And I know Fidelity's been a good actor for the space for a long time. And again, yes, the best place to do it would be self custody, but there's a whole lot of paperwork and stuff to deal with there. I've got enough paperwork on my plate. So for that case, I actually went for FBTC. That's my kind of option there. And for me, it is absolutely passive bid for my retirement account every month. I don't think about it. I don't check the price. I don't care. I just literally hit buy and move on. That's the end of my thinking about it. So I'm positive there's a huge pool of Bitcoiners out there who have done very much the same thing. And there's going to be this passive bid that just keeps coming in every single month.
Oh, you just don't like Coinbase, or just obviously you want to be different?
Yeah, no, more so. I think that Fidelity doing their own custody is it's a proactive step, and they've been a good actor for a very, very long time. BlackRock is a big entity. I understand why they've got like the shelling point. I can see why TradFi would go there. It makes sense. But I'm very much someone who likes to, if I am going to buy an ETF, I'm going to go for the one that's built their own custody solution. They haven't just outsourced it to Coinbase. And they've been in the space pushing Bitcoin forward since like 2013. They've been around in the space for a very long time, which is quite remarkable for a traditional finance outfit.
Yeah, true. And they have a lot of also other coins that they can offer. Obviously, we're not going to talk about them, but they are everywhere when it comes to crypto, in the crypto space. Just in general, how do you still stand behind your bet that you have made on what Bitcoin did in 2014? Do you remember that bet?
I think so. Yeah, it's the highest price in 2025, right? And I think I'm 250K. That was my highest price.
Yes. Do you still stand behind it?
Yes. So the rationale behind that. Yes. So if I recall correctly, my level is 250. Danny's is like 280 something, and Pete's is like 300. It's up in space somewhere. And my reasoning at the time, I think we would have made that in 2023. I think the ETFs. Oh no, it would have been 4 because the ETFs were live. And my reasoning was, look, 250K. I actually don't think that we get there. I actually don't think we get there. Certainly not this year. That's not my base case by any stretch. So we'll get there eventually, but I just don't think in 2025. And I went for something that back then I felt was much more conservative than what the going narrative was, which was we're going to get to $100 million, which I just don't think is happening. So it was a conservative view, but it's a little bit clever. I get everything to the downside. So it's basically closest to the pin. So if it's anything below 250, I win.
Yeah.
Danny's got to get that neat little pocket between 250 and 280, right? Whatever that gap is, and then above. And then Pete's got everything in the moon mission. So in many ways, I'm already in the money. And I played my cards somewhat conservatively to maximize my chances of winning that bet.
Yeah, true. So I do think that I'm not a bear in any way. Obviously, wearing a Bitcoin shirt, obviously. But for this cycle, I don't feel like we're going to get up to 250.
No, I'm put it this way: if Danny and Pete are listening, I've already got your 200,000 sats in my spreadsheet. So that's all right. I already consider that mine.
Nice. And just one more thing: how would you define for you Bitcoin success? just the success of Bitcoin. It's obviously not the price. I know that's not going to be that not or I guess it's not going to be that's going to be the answer. But how would you define the success of Bitcoin in the grand scheme of things, just in general, for yourself?
No, I think it's a really, really good question, a very deep question. One of my longest running bull cases for Bitcoin. If you go to any Bitcoin conference or you just meet Bitcoiners, you go to a Bitcoin meetup, or you just, again, if you can get through all the noise on Twitter, what you'll find very quickly is that this strange thing has attracted some of the smartest people in the world. There's a lot of smart people who hate it as well, but there's a lot of people who come from very, very interesting backgrounds. And what I find so interesting about Bitcoin is the world, I mean, up until very recently and still in many ways, keeps telling you that you're wrong. So just think about the kind of people who can develop enough conviction in this asset that the world is telling them, their family, their friends, their government is telling them that they're wrong, that they're idiots, and that they're crazy. Imagine putting your life savings in that thing. You're a special kind of person. So all Bitcoiners go through this kind of unique journey where you keep getting told you're wrong and you're like, but I don't think I am. And you actually build self-confidence. You go, no, I actually trust my work. I've done the work. I think you're wrong. No. And despite all those headwinds, here we are where it's being talked about at pension fund levels, TradFi levels, sovereign levels. We memed this thing into existence. We got it so far across this. Like, I don't know where the finish line is. There's many finish lines, but the fact that we've got Bitcoin this far and we just did it by just raw grit and saying, no, I believe in myself and I believe in my own thesis. Think about all Bitcoiners out there going through this journey and then them being in whatever walk of life they're in. They could be an engineer, a doctor, they could be a tradesman, doesn't matter what they do. We're all out there just like doing the best we can. And Bitcoin changes the way you think about stuff. I was always a natural saver. That was my natural gravity. But it helped me be an even better saver and start thinking very long term. And now that I think very long term, I've been able to build a business. I've been able to change my life. There's a lot of positive things I've been able to just like restructure and shift around. Bitcoin has helped buy me more time in my day, in my life, which is invaluable. So I just look at this thing. I'm like, Bitcoin's bought me time. It's bought me opportunity. It's bought me friends. It's bought me like all of these different things. And I just think about all the Bitcoiner stories out there of people just living their lives and it just being better. And I'm a big advocate for whatever you do, whether it's a job, a project, doesn't matter. As long as you leave it in a better condition that you found it, you did a good job. That's my base case. That's how I operate with everything. And Bitcoin is just kind of getting all these people to live by that simple philosophy, which is just let's plant trees that we may not sit under, but at least there's a tree there now. So that's how I think about it. And I think in that regard, it has been successful already. But the longer it keeps doing what it's doing, the more impressive this is going to be. And I love that side of the equation.
Let's plant trees that we're not gonna sit under, but they're gonna be there.
That's it.
Man. This was If I have to summarize it, this is it. Yeah. If I have to roll you back two questions back, when we talk about the top, you keep mentioning in your videos and for your paid subscribers, for which I advocate everybody to subscribe to, by the way, because it is extremely cheap for what you get if you have to compare it to anything else. So yeah, you might consider raising the price. I don't know what are you doing there?
I get told a lot that I should raise the price. But we set it at a level where I would rather people have access. So we keep like, basically it was my job always to make sure that it feels cheap. Not cheap in a low quality standpoint, cheap in the sense you're like, I can't believe I actually get this much for this price. So it's my job to make it feel like it's high value. And that's just how we framed it. I was like, I would rather people have access. And then once you get a loyal base of subscribers, you just kind of press on and just do the best you can.
You keep mentioning, correct, and you keep mentioning that about the true market mean, and you think that you will not get under it this time when we go into a bear cycle. Could you elaborate more what the true market mean is, and why do you think we will not get under it or close to it during a possible
Yeah,
fallout?
so I think we can still go under it for sure. I think that there's every reason we should go under it, but I also think it's a point of maximum pain. So let me explain where it came from.
Mm-hmm.
There's a model called the realized price, and the realized price is the average cost basis per Bitcoin. So let's look at every single coin in the supply from Satoshi all the way to you and me. And what is the price when those last moved? Find the average. Now, from memory, I think it's about 48K or something at the moment. Now, the problem with that is you and I, and everyone else probably listening to this podcast, we are capable, able, and even if you don't, you are able to sell, buy, transact, move. Your coins are not dead; they're not lost. Satoshi, it doesn't matter if the price goes to $50 billion a coin. If he's dead or he's lost them, he can't sell them. So there's a bit of a problem here because in order to be at break even, so to speak, which is where the price is on the realized price, that break even level, Satoshi's holding, and this happened when FTX blew up. We went below the realized price. Satoshi was holding like $15 billion of unrealized profit. But to be at break even, that means there's a bunch of guys like you and I in the cycle who are real and active. We had to be down 15 billion to offset his billions of, and the same for the old miners. So Dave Puel and I, we did a big study called Coin Time Maker. It was like 120 pages of just nerdy, weird stuff about on-chain data.
I read
And
it.
anyway,
I read
yeah,
it.
I'm surprised anyone read it. It's very esoteric. But anyway,
I cannot claim that I understand it as well as you do, but I read it.
I don't even think I understand it, honestly. It took me 18 months to write it. My head was cooked by the end of it. But anyway, the true market meme was one of our probably biggest breakthroughs and innovations from that piece. We actually developed it purely from first principles. So we didn't look at any of the statistics or any of the way that Bitcoin trades around it. We literally developed it from first principles. I won't go into the details because it's deep and dark, but what it does is it gets rid of the longer a coin is dormant, the more it discounts it. It doesn't care about it. And it's very, very simple formulas, but it's quite elegant in the way it's set up. So it gets rid of lost coins and it focuses on active investors. And what we then did is we modeled like an MVRV ratio. How does price oscillate around it? And the most bizarre thing happened. Again, we constructed this thing from first principles and it is in the middle. Bitcoin has always oscillated around it. It spent 50% of its time above it, 50% below it. The average, the long-term mean of the oscillator is 1, and the long-term median is 1. This stuff, like this just doesn't happen in over the course of, when did we write the piece? 23, I think.
23
So
is November.
yeah, so like 14 years, and the market just like is oscillating around this thing. It's like, that's super strange. So anyway, I actually thought back in the last cycle in 2021, so in that bear market, I actually thought it was going to be the floor. It was about 30,000. That was the level of it.
I know.
And I thought that's where some, 25, 30, somewhere in that ballpark, that's where I thought we'd start to bottom. But what I didn't factor in is Three Arrows Capital, Luna, FTX, and that's what took us below that level and down to the realized price. So unless we have something of that magnitude, a deleveraging where you just like, I think a lot of people still don't fully understand the scale of that wipeout. It destroyed the entire lending industry of this market. Complete fire, wiped it all out. Unless we have something of that magnitude, I struggle right now to see us going back down to 48K. That's a very, very low level. Now, when this bull cycle tops, sure, it will probably be a bit higher. But to get to 40K, you've got to undo the ETFs. They went live at 42.5. So it's a big drop. Something really has to go wrong to get down to that level. So then my framework goes, okay, well, we also spent a year chopping around above $1 trillion market cap in 2024. Yeah. We spent 8 months there. That's where the true market mean is right now. You mentioned the ETFs at 71. That is approximately where the true market mean is. That is also where Michael Saylor's strategy cost basis is. So you've got the ETFs, you've got the average active investor, you've got strategy. That to me, if we go into a bear market right now and the top is in at 123, that level, wherever that is, 71, 72, 73, that's the target. that's where I think we go and refine that floor. If we did have a bear market. Now, I don't think we have a bear from here. I actually think the bear market starts from higher up. But by the time we hit that, let's just for argument's sake, let's say we get to 150, 160, something like that. It takes us, I don't know, 6 months, 8 months, 12 months to get there. Once we've hit that level, now that true market mean might be at 95 or 100, something like that. Can you imagine a bear market going from 150 or 160 down to 100, maybe 95 or 90? Absolutely. Now I can really construct that picture. So that's my base case for the moment. Again, it's a view I hold loosely, but more strongly than I previously did. But we just don't know till we get there. But there's fundamental reasons. We will see how the market evolves at the time. It could be that we just go high enough that it doesn't make sense for that model to work. But that's my base case. So I will be a little bit sad if this thesis is correct, because the beautiful statistics of Bitcoin oscillating around it perfectly. I don't want to destroy that long-term average. I actually don't want this thesis to be right for one reason, but fundamentally I believe it because it makes sense to me from a fundamental perspective, and it's also very curious how strategy just follows it. ETFs just follow it. It's just that sweet spot, and you can imagine the headlines. What do you see at the bottom of a bear? Sailor about to explode. ETF investors all wrecked. You can just see all these headlines and like, what are hodlers going to be doing?
Stacking
Give
away.
me all of it.
Yeah.
I'm in. Let's go.
Yeah, like to fall below it, we have to have something significant that can happen. Something significant could be like an ETF going bust. I don't know if that's possible in any way, or
Totally. Yeah, agree.
and being just having a forced seller of let's say 30, 50, 80,000 coins on the market. That's something that can push us below it in terms of like the true market mean. And obviously Sailor, but Sailor is he has built a fortress. I don't see him. I don't know. It can happen. You never know. He can go crazy like McAfee. I remember McAfee very well. But I doubt it because it's different.
Yeah.
We live in a different world. But yeah, it is something for, I guess, for a different time to guess. Now we're in a
Yes.
different time. We're in a good time.
I think that's the right way to think about it, right? If Sailor does go completely lunatic and just like fire sales them all, okay, now I can bring you down to the realized price. But again, what's going to happen? I mean, I'm going to step in the front of that. Absolutely.
Yeah. Could you tell me, just in order to wrap things up, one thing that you're very looking forward to in the Bitcoin space this year or just in the next 12 months, and one thing that you're afraid of in just in general?
Interesting. So looking forward to, actually, I'm quite curious to see. It's a small thing, but I think the idea of covenants, but also just like seeing how Bitcoin handles soft forks, because we've obviously seen there's been a lot of contention over the knock-on effects of even, I mean, it's actually SegWit and Taproot, but what's happened with inscriptions is a lot of people who just are like, no way, no more changes. And I look at it and go, but like, it would be really, really powerful to have covenants that actually, like, you could have unhackable exchanges. You could have insurance contracts that literally can't be hacked. These are really interesting dynamics. And I've been a long proponent of multi-sig. Just like, let's take multi-sig.
Mm-hmm.
It is so much better than gold. The fact that you can have signatories around the world or different organizations, and just that can secure coins, is so different to gold. So that to me is our ability to adapt. And even though there's a lot of people who want to ossify, I actually still think there's enough energy in Bitcoin to say, you know what, we actually need to make this thing better. So I'm very curious to see how Bitcoin adapts to a growing pool of people who want to, even Sailor, he wants the protocol to stay the same. And by the way, so do I, unless there's a very compelling change. So I'm actually curious from like an intellectual standpoint to see how Bitcoin as a network adapts to some ideas that are very, very good. But we also have to deal with this challenge of Bitcoin is very hard to change. How do we do this? And even after all these years, Bitcoin actually does not have a system by which we can upgrade. Like, we actually don't have a formal process, and that's a feature, not a bug. So to me, I find that whole thing very intellectually stimulating. So that's something I'll be paying a lot of attention to. So I'm excited about that, just to see how that plays out. Concerned about, very similar, And I don't think quantum is a threat anytime soon, but I think it's a really nice way to point out this risk. What happens if we can't adapt in time? That's the thing I'm concerned about. What happens if the system can't adapt to very real threats? It could be quantum, it could be something else. But what happens if we actually do hit this ossification wall? So it's almost the flip side of the coin and say, well, what happens if we can't change and we can't adapt? What happens if privacy becomes a real problem, right? We get too much surveillance and all these types of things. And we actually, there's options to change, but we can't because we've just like solidified up. So I think it's kind of all in the same bucket. I'm very excited to see how it plays out, but it concerns me if we actually can't find the solution to things that really matter. So as Bitcoin gets bigger and more successful, all of those things start to come into view, and it's gonna be a fun road.
Yeah, true. Thanks, Jack, for your time, man. I really do appreciate your answers here. And just one thing, I really like that in this conversation we never mentioned the Fed, we never mentioned any risks from central bankers or whatever. Like I'm concerned for the macro stuff, like that sentence, and everything you do is focused on the fundamentals, and it's focused on how you read the situations through the lens of fundamentals, which I really do appreciate, and I find it very valuable. I have not found anybody else that does this in such an accessible language as you do. So keep that up.
Thank
I
you.
think this is something that's one of your strong points. Obviously, there Dave Pugh. Obviously, he knows a lot, and he's way before us in this. But you do it a significantly better job in explaining things to people in a different, in an accessible language. So keep it up, man. I really
Thank you, mate.
appreciate
I
it.
appreciate that.
I really look forward to meeting you physically. I guess in Australia it's gonna happen.
No, Matt. I mean, it depends where you are in Europe, but I do plan to get over to Europe more for you because you got some great conferences over there. So I'm sure at some point in the future we'll cross paths.
I'm in Bulgaria, but I do travel a lot, so it's okay. So we'll meet.
Happy days.
Yes. Thanks, man. I do appreciate your time.
Good on you, mate. Thanks a lot.